Jack Hurst, Philadelphia. I have 3 questions or 3 points. The first is I want to thank you for the pleasure it is to shop at Borsheim's or Nebraska Furniture Mart or even Benjamin Moore. You have terrific people working there, and I've never been as satisfied with products as with what I bought at those firms.
Well, thank you for that, and I thank you on behalf of the management. They are terrific people that work at those companies.
I agree with that. You've dropped quite a bit from the annual report. There must be some God-given decree that it be limited to 72 pages. But I wondered if you could put that in an internet message, such as that wonderful table about GEICO, its renewal policies and new policies, and the 4 pages at the end of the report about the business categories where you separate the insurance from the finance from the manufacturing, and also that discussion that you had of look-through earnings. I think it's invaluable for looking at the company.
Okay, well, I appreciate the suggestions. And
I have a third point. Go ahead.
But we do go through I don't know whether 72 pages is the magic number or when I get to about 11,000 words. But occasionally, we do make an editorial decision. The look-through earnings, for example, didn't seem that important, and they're fairly easy to roughly calculate for anybody that's interested. But they are something that if I wrote for 15,000 words, I would have included. So I appreciate the suggestion on it, and I don't think anybody's accused me of writing too short a report yet. No. But I'll take. It's certainly it's possible on the internet to put up anything, and we'll put up any material we've given you here before the opening on Monday morning, so that nobody has a jump on any information. We try to make it. I really want to cover the things that would be important to me if I were hearing about them on the other end, and we try to keep it to some number of pages. But I'm glad you want more.
Okay, the third point is the 1st of March, the Wall Street Journal analyzed or compared the auditing fees by the fees related to audit services and other audit services for the 30 stocks in the Dow Jones Industrial Average. And there seems to be an inverse relation between the amount of non-audit fees with respect to market capitalization, inverse correlation with that factor, to the 5-year compound growth of earnings or the 5-year total return for the companies. And for the companies with the lowest ratio of non-audit fees to market capitalization, the increase in earnings was 10% annually. The total return was 18% annually. For the total, it was 5.2% return annually on increase in earnings and 11% increase in total return. Is it because these non-audit fees are non-productive that it has this result, or is it a chance at just a spurious fluctuation, or is there something to the relation?
I don't know the answer to that, and I hadn't seen what you are referring to, but it doesn't totally surprise me because we like places that care about expenses, and I've never. I think Jack Welch had something in his book about no company ever going broke from cutting expenses too rapidly. And when you see managements that are pretty lavish in what they toss around, I think on balance that group doesn't do as well for shareholders as the other. But I have no statistical way of proving that, and I don't know a way that I don't know how you would set up a sample that would really be valid in terms of one kind versus the other kind. But what you say doesn't shock me. We try to watch all expenses around Berkshire, and I think that at our subsidiaries, we, generally speaking, we have managers that are very, very good about that. And I think that our audit costs relative to the size of the enterprise and all of that, I think are fairly low, although they're not as low as they were a few years back. But it's something that we care about, I can assure you that. I don't know how to, I wouldn't want to buy stocks, though, or sell stocks based on any kind of statistical measure like that, even though it looks good on what they call a back test. Charlie?
Well, one of the reasons our audit costs are so low is we have this passion for keeping everything simple. We don't want to be difficult to audit, and we prefer our activities that are simple. If you take the See's Candy Company, the whole company goes to cash at the end of December every year, as if it were a farm where the crop came in and was sold in December. I mean, an idiot could audit the See's Candy Company without getting into trouble. And there's a lot in Berkshire that's like the See's Candy Company. It would be really hard to screw up.
We don't like complicated accounting. I mean, we really do like things that produce cash, and Enron is a good example. Enron's grotesque in what happened, but there's no question in my mind that auditors have been unduly compliant to client wishes over the last few decades, and more so as they went along, even to the point where they started suggesting what I would consider quite dubious accounting to people in mergers and so on, so as to make their figures look better later on. And I've seen it firsthand. So I think that although the auditors are supposed to work for the shareholders, that they got too much so they were working for management. But I think that Enron may push them back significantly, even in the other direction. So I think Enron will have a distinct beneficial effect on auditing, and it was needed.
So it's going to have a distinct beneficial effect on one fewer auditors.
Yeah, although, you know, it's an interesting question, and Charlie and I may differ on this. I mean, I don't know how many people Anderson employed, but it was a huge number. And it's clear that the weaknesses and culpability at Anderson goes far beyond anything remotely we saw at Solomon. But it would have been a shame for Solomon, with 8,000 people, to have actually the bad acts of one guy and the lapse in terms of reporting and all of that, which was a big mistake, but by a few other people, caused 8,000 people to get dislocated in their lives and lose their jobs. I don't know, how do you feel, Charlie, about, you know, the bottom 40,000 people at Anderson who really didn't have a damn thing to do with shredding or the Houston office or anything of the sort? I mean, their lives are really getting changed in many cases.
I regard it as very unfair and totally undeserved in all those cases. Yet even so, I think that capitalism without failure, somebody once said it's like religion without sin, or
Religion without hell.
Religion without hell. I think when it gets this bad and the lack of adequate control mechanism throughout the system, I mean, Anderson plainly didn't have a good total system of control. And I think that it may be that capitalism should just accept this kind of unfairness in all these individual cases and let the firms go down.
Well, let's say you and I did something really terrible, Charlie, at Berkshire. How do you feel about the other 130,000 people then? I mean, should they?
You'd feel terrible about them, and there's no question about it. And but I'll tell you something: they wouldn't go down. The way we're organized, they wouldn't go down. Warren, there's nothing you can do that is going to destroy the value of the subsidiaries and the careers within the subsidiaries. You can blow your own reputation. You can blow reputation at the holding company level, but you can't destroy their livelihood. That is a good,
Well, we could
a
mess
good
up.
way to be organized.
We could mess up their lives, though. I mean, if they lost their funding, or I mean, I agree with
Not
you about
very
their
much.
viability, but
Anderson was particularly vulnerable being a professional partnership. But maybe you should be extraordinarily careful if you're a professional partnership with what clients you take on and how far you go for them. The law firms that I admire most have fairly strict cultures of risk control. I think it's crazy in the kind of world we inhabit to operate in any other way.
okay, number 7.